Vox Pops zingine ama ndio hizo?
Nikiwa na kama 50,000 Kenya shilling.
Oh, ndio.
Nikiwa na kama 50,000 Kenya shilling, ni kuongeza, nitaongeza biashara yangu kwa ajili sijatosheka na hakuna biashara, na biashara imekuwa chini sana. Na hakuna mahali ambapo tunaweza kupata loan, na ni kung'ang'ana, tunang'ang'ana. Kwa hivyo we need more money, na tunataka kuinvest na tupanue biashara zetu watu, lakini sasa pesa za kununua vitu kama hizo kwa saa hizi hakuna.
6.7. Go to whatever. Yeah. Okay. Sawa. So when we come back, we'll, yeah, I think Ntaitisha, we can start with that. Oh. Thank you. We're back. Thank you for staying with us. The hashtag is Business Now at Citizen TV Kenya, at Yvonne Okwara. We are at your service. Answer all your questions to do with government securities, as treasury bills and treasury bonds. A quick reminder that before we finish this conversation, we did have a bit of an assignment to see just how much you could make with one T-bill at 100,000 shillings and one T-bond at 50,000 shillings, just to demonstrate to you what the returns look like. We will get to that in a moment, including some of your questions that will be answered now. I'm seeing them on Twitter, so keep them coming. But first of all, more from the Mwananchi on that question today: what would you do with 50,000 bob?
Nikiwa na kama 50,000 Kenya shilling, ni kuongeza, nitaongeza biashara yangu kwa ajili sijatosheka na hakuna biashara, na biashara imekuwa chini sana, na hakuna mahali ambapo tunaweza kupata loan, na ni kung'ang'ana, tunang'ang'ana. Kwa hivyo we need more money, na tunataka kuinvest na tupanue biashara zetu watu, lakini sasa pesa za kununua vitu kama hizo kwa saa hizi hakuna.
Pesa kununua vitu kama hizo. Hizo vitu tunazungumzia ni T-bills na T-bonds today on the show. So let me get into some of the questions that we're talking about. I think, David, you could respond to this one from Jacob Abere Matlala, who asks, are bonds good for one to use as security in acquiring loans?
Yes. Yes, one can actually, this is what we call all the bonds that we have. Say we have government bonds, like he did explain, you have corporate bonds, yeah, which are really institutions that are offering them out. So at CDSC, where it's like the bank account for your shares and bonds, you can actually put what we call a lien. So a lien means that you can actually borrow against, you can actually pledge those securities, and then maybe you can get maybe a loan. So they'd actually pledge it. So if you go to a financial institution, maybe you want to borrow, then you can tell them you have these bonds, and then CDSC would actually block them, and then you can actually borrow against that. So it becomes a form of security for you. Yes. But
you wouldn't advise taking a loan to invest in T-bills and T-bonds?
Okay, I think it depends, because actually I have done that when the deal is too good. Yes, if the deal is good, right, I think you can do that. I mean, okay, just think about it. Yeah. I'm just giving a hypothetical example. All right. Yeah. So for example, if maybe you can get a salary advance at 0%, and then you put it in a T-bond, and then you make some money. Okay. Yeah. So you can use what you call other people's money and still make. So I think it's just a calculated risk, as long as the return from the bond is higher than what you're borrowing.
Absolutely, yeah. Okay, that makes sense. Johnson, the difference between bonds and shares in terms of the yields or return on investment?
So The difference really is more qualitative than quantitative, only because nobody can tell you today what your return on a share will be 12 months hence.
Okay.
So for fixed income, as the name suggests, the income is fixed. It's pre-known.
Predictable.
It's predictable.
Okay.
And for shares, it is not.
Yeah.
So, but the variance in returns in shares can be huge. We've seen people do 100, 200%, 300% in a matter of months on shares, but you can't do that on bonds.
Okay.
Well, you can, but it's very, very, very unlikely.
All right, and also just again, now that you've mentioned shares and bonds, a lot of factors determine the return that you would get on shares. Yes.
David gave you a brief synopsis of what can affect the price of a bond.
Yeah.
Now, the price of a share can be affected by a lot more. For example, returns in the bonds market, performance of the company, and the performance of the company really is where most people spend their time on when they're analyzing shares.
Yeah.
And it could be your markets can shrink, competition can hit your business, you can management can swindle the company. So there's a lot more to analyze when you're looking at companies than when you're looking at government bonds.
Okay. Yeah, and we're just getting that question, I believe that's just been answered there by, you call yourself Ocean Ripple on Twitter. You say you're learning a lot, and I think your question has just been answered regarding bonds and the money market funds, particularly where one has no urgent needs for the cash. So those are some of the questions. Then I think we can get into now the little assignment we had. So I asked this on Twitter. 50,000 shillings, and that's what we've asked our viewers as well from around the country. How much would you make with that? Remember, the minimum to invest in... Oh, wait, I have actually one last question, and Kevin, perhaps you could answer this one. So what if I and a group of friends came together in our chama or our sacco or whatever, just and put together some amount of money and said, we have 50,000, 100, maybe 150. Can we trade in T-bills and T-bonds, and how would we do that if we came to you?
So I was actually to mention it because I realized we'd skipped it.
Yes.
You can invest as a group. You can invest as a chama. You can invest with your spouse. You can invest with your girlfriend, alone. You can invest in whatever form you want to. So all you need to do is, if you have to open a CDS account with the central bank,
yes,
we can help with that as Genghis. We can show you the direction, but ideally just walk into the central bank, get a CDS mandate card, and now for that, depending on how you incorporate it, is it a chama? Do you have a group for it? Do you have in whatever form you've organized yourself?
Right.
So you get that. You take it to you have to have a Kenyan account, a Kenyan bank account.
Yes.
So you have to take that document to your bank account, so they have to verify the details of your account. You have to get passport size photographs of all the members. You have to have the passport size photographs authenticated at the back by the bank.
Yeah.
So then once you're ready, a copy of your IDs for all the members, then you have to take it to the central bank, and then they'll open for you the account depending on, is it a joint account, is it group account, is it whatever. So once you've done that bit, and you only do it once, so it's only good. You only do it unless it remains dormant for 1 year. Then you'll have to redo the process again. Right. So once you do that, now you come to Genghis Capital, and then we can be able to advise you on whether you're getting your primary issue, a secondary issue we want to sell for you, whatever you want, then we can do it for you.
Okay. Yeah. Okay. So I guess that's an interesting one. Okay. So you were looking at what? T-bills, right?
Yes, yes.
And T-bills are the ones who said require a minimum of 100,000 shillings.
Correct.
So this is it, 100,000 shillings, you invest it in one T-bill, one treasury bill. What would we get in return?
So I have 3 scenarios for T-bills, and the 3 scenarios are, again, the 3 months, that's the 91, the 6 months, the 182, and the 1 year, or the 364. So your 100,000 shillings, you come, the rates as we speak for the 91 is 6.728%. Remember, as Nderi mentioned earlier, this is 3 months, so you have to divide that by
3.
Correct. Really?
4.
4.
Yes.
Sorry.
All right. So
yes, because it's every quarter.
It's a quarter.
Got
yes.
it. Okay.
Yeah. So once you divide that by 4, so your 100,000. If you're going to invest in the 91 day, you're going to make a profit. It's an interest. Let's call it a profit for the viewers of 3,000 shillings.
Okay.
Yeah. So if you take the same amount and invest in 6 months, which is the 182,
yes,
you're going to make a profit of 5,915 shillings.
Okay.
You can see it's scaling up incrementally. And if you're going to invest that in the 1 year, which is the 364, you're going to pay the government 88,900 and make a profit of 11,000.
I see.
So you can see, the shorter the tenure, the lower the interest or the profit.
Okay.
The longer the tenure,
the more you get.
Correct. And the same applies almost in a perfect state to the bonds, but not always.
All right. And you just had something about like that current interest rate for the T-bill.
Oh, yes.
Versus, say, if you were to put this money in the bank.
Yeah, and this is something I have a friend called Caleb who's always asking me, why should I remove my money from the bank and
put it in a
to
T-bill?
the government?
Right.
You know, the government is stealing from me. Why should I give them more money? And I keep telling them the same thing. So you go, and same thing David was mentioning, you have to be very smart about taking a loan to invest. Yeah. So you go to your local bank and get a loan at say 14–15%. To go and invest in a 5-year paper at 12.5%, you'll have to be silly to do that. Yeah.
Okay.
So unless you're getting this loan at 2–3%, if you're staff for some of the guys, then you can take that at 3%, go invest in 12%. You're making a cool 9% every year. And I know folks who do that. So again, putting your money in the bank. Yeah. People tell me, you know, there's ease of access. I can go to the bank anytime and get my money. Yeah. People tend to overcomplicate fixed income. Yeah. You know, it's as easy as coming to us and telling us, you know, I need to sell this paper or this bond or T-bill, and we'll sell it
so
for you.
So you can dispose of it.
Yes, you can dispose.
But I guess the other element of it is to encourage the saving culture, right? So it's not to put your money in there for you to keep going in and,
of course,
you know, sort of taking it out. But the idea is to let it sit there for a while, grow, and make you some more money.
Of course, we want to inculcate a saving culture.
Right.
But the discussion that people will tell you on the street is, I prefer the bank because I can get my money easily. So you go to the bank, and I was just showing you the deposit rate for a bank. If you put your money there for 1 year, 6.3%. Yeah, you're getting 12%, 11.5% for 1 year, 1.5 year bonds. Why the hell would you put your money in a bank at 6.3%? Well, you have the alternative is you can make another 6% on top. You know, and so I tell people, you give this money to the banks, and some all of us have worked at banks. You give this money to the bank,
and
the bank will take your money
it
and do the same thing you should have done, or Kevin would have done for you, and charge you for it. Yeah, so you take your 5 million, 10 million to the bank, they give you 6.3%, they go invest in a 12% paper, keep the difference and give you 6%. I mean, guys really have to think about this.
Absolutely. The bank is making money with your money.
With your money.
Johnson, your final one, your assignment was the T-bill, T-bond for 50,000, right?
Can you chalk that up to 100?
Fine.
It's
go
easier.
For it. Go for it.
Yeah, the math is easier.
Around, okay. Let's go.
So I'm going to make a couple of assumptions, right? Number one, we're buying a 5-year bond.
All right.
Number two, it has a coupon of 13%.
That's an interest.
Yeah.
By coupon, we mean interest, just for my
return. Interest.
It's the return you get, and it's based on the face value.
Yes.
And that one doesn't change.
Yes.
It doesn't change.
It's fixed.
That's why we try to differentiate between coupon and interest rates.
I see. Okay, yeah, because the coupon doesn't change. Got it.
Yeah.
All right.
And then there's, so you're going to be holding this for 1 year. Remember, you bought a 5-year bond, you're going to be disposing it 1 year hence.
Okay.
Right? So you bought it for 100,000, and I'm going to ignore taxes. I'm going to ignore taxes. So you're going to have, at the end of that 1 year, you're going to have 13,000 shillings in interest rates, in interest earned from the coupon.
Okay.
Now that is your first return. But now here's where it gets interesting. I'm going to give you 3 scenarios.
Okay.
Scenario 1, interest rates went up. So you're going to sell it at a discount now. So for example, let's assume you bought it at 100,000. Let's assume that the discount forces you to sell at maybe 99,000.
Okay.
So you've lost 1,000 bob.
Right.
But you've made 13,000. So you made 12,000.
Okay.
All in all. So scenario 2, interest rates stayed steady, right? So you bought it at 100,000. You're selling it at 100,000. So you made your 13,000 flat. Scenario 3. Interest rates went down. So now the paper you're trading at, you can sell it at a premium.
Okay.
So you've earned your 13,000, you're selling it at 101,000, you've earned 14,000.
Understood. I think that's good enough. And yeah, food for thought. David, I want to give you the final word on what more you know, Kenyans need to know, to understand. And it's not necessarily to say invest in T-bills and T-bonds, but you know, at least you have the information to make an informed choice.
Yes, so we are really delighted, and thank you so much, Johnson and Kevin, and also our hosts for having us. Of course, at the NSC, we have what we call the Investing Tuesdays. So every Tuesday, instead of just looking at Terrific Tuesday, you can also get to invest. So we have the Investing Tuesday, where we break down the stock market, be it investing in bonds, be it in shares, real estate investment trust, we have derivatives, all of that. So we have that package. You can visit our website at the NSC and also our YouTube channel. On our YouTube channel, you just type Investing Tuesday, and then you can be able to see experts like Johnson and many others, and Kevin, who will be able to break down and also get you to understand. You can also download the NSC app, which shows you real-time all the different prices that are there in the market and opportunities that are there. So you can really get to learn a lot. So what I would say as a closing remark is that invest in education. When it comes to investments, the best investment, first of all, is in education, and that's what you guys are doing, and you're doing a fantastic job. Thank you.
Thank you very much, David Dirungu, Chief Officer Cash Markets at the Nairobi Securities Exchange. Johnson Derry is a Manager, Corporate Finance and Advisory at ABC Capital, and Kevin Ngige, who's an equities trader at Genghis Capital. What a learning experience. So I now know what the bank is doing with my money. Hopefully I can do the same thing my bank is doing with my money and make my own money without having to go through the bank. I hope you've had you know, an opportunity to learn about it, make your decision, see what you can do with that amount of money, and like they said, you can do it even as a group. Thank you so much. Gotten some great feedback, so keep that coming. We will see you again next week on Monday. So have a terrific Monday and a terrific Tuesday as well. This time make sure you're not just eating something, but you're learning something as well. My name is Yvonne Okwara Matole. I'll see you next week. Bye-bye.